For more on how China could respond, former Morgan Stanley Asia chair Stephen Roach joins us now. He is currently a senior fellow at Yale Law School's Paul Tsai China Center. Stephen, great to have you with us. How do you see this playing out?
Well, the markets were clearly in a death spiral, and Trump flinched today and, gave us all some breathing room. But as you heard from Secretary Lutnick, Trump is still clinging to this harebrained scheme to remake the world with tariffs, and that's not something that's going to end well. The China thing is unrelenting. It's important to sort of note the sequence of events. We moved first with these reciprocal tariffs, and then the China responded, and Besant and the president have turned it around, saying China shouldn't have responded. Well, they viewed this as an attack, so they felt they had to move.
This seems to underscore, though, pausing the reciprocal tariffs on everybody but China, and in fact raising them specifically on China, underscores the fact that this is a trade war that focuses on China, and it sort of isolates China as well. And I'm wondering how you think that gets played out in China, and what their next steps would be. I mean, it could be tit for tat and tariffs. So we've always said here that there are many other ways China could retaliate, particularly against countries who do business over there, like an Apple or Starbucks or any other company that has executives over there who could easily be detained for a myriad of reasons.
Well, let's keep in mind, Melissa, that China still remains today our third largest export market behind Canada and Mexico, and the second largest foreign owner of treasury. So they've got plenty of options to deal with should the U.S. continue to tighten the screws. And, I was in China for 10 days a couple of weeks ago, and it was pretty clear to me, in talking to a lot of senior officials and academics and business people, that they viewed the likelihood of further tariffs as clear justification to retaliate, and they did. And they retaliated after we hit them with reciprocal tariffs, and then after Trump didn't like that and he hit them with a penalty, they retaliated again, and he doesn't like that. So he's throwing a tantrum and continues to want to isolate and squeeze China, and that won't end well.
Hi, Stephen. Mike Schumacher. So 2 questions for you. Number one is, how likely do you think it is that China actually would sell treasuries in bulk? There's been a lot of speculation about market action over the last week. And then secondly, what about the currency, the RMB? So our view of Wells is it weakens quite a bit. So we think U.S. dollar CNH, for instance, goes to 770 in a couple months. Do you think that's possible? How would the government react?
Well, I think the currency option would be preferred over the nuclear option of unloading treasuries. But, if China feels that it is being attacked economically or militarily, they will respond, and they will use all the weapons at their disposal, including their vast holdings of treasury, to strike back and defend themselves. So, it's a two-way street, Mike. It's where both nations are dependent upon each other, and we have tools that we've used, and they have plenty of tools that they can use. And right now, it feels like a race to the bottom between the two largest economies in the world.